This is the only market structure trading video that you will ever need, because I will simplify exactly how to trade 1 to 2 hours a day and only looking at two things. No top-down analysis, no complicated indicators, just pure candles. So if you are new to the channel, my name is Joseph. I help Africans living abroad quit their 9 to 5 and make trading their full-time job. If this is you, links in the description. Let's get started. All right, market structure. What is market structure? Market structure is just this, candles. That's it. It's candles. And if you can understand candles, then you know where price wants to go. And if you know where price wants to go, then you know how to make money. And so I will show you step by step exactly how to use market structure. Now, step 1 is understanding how the market moves. And so the market moves in 3 ways. Number 1 is consolidation. Consolidation means that price is not going up or down. It's just bound within a trading range like this. And this is what was happening on Friday on US 100. Here, notice how price was just going sideways. This is the first thing the markets do. The second thing is we either break out and continue with the trend. The second thing is either we break out and trend upwards, or we break out to the downside and continue going down. So the markets will either go up, either go down, or stay within a trading range. And there are many different ways to represent this. So for example, if you look at what has happened here, you'll notice price was consolidating here. So price went up, consolidated, went down. Then price came down. This whole here is consolidation. And then notice, broke out, continued with the trend. Now, markets are consolidating here. So what are the two possible scenarios? We either break to the downside and go down, or we break to the upside and continue with the trend. And you can represent all this with just 2 candles. Now, what are candles? So candles are these boxes that create market structure. And they are a representation of price and time. And so, if you want to simplify this to the simplest form, what you do is you understand exactly what candles are. And a candle looks like this. So let's change this to red. Now this means it's a candle that is going down. And a candle that is going down has a lot of information. First of all, if you look at this area of consolidation here, the upper part is called resistance, because price tries to go to that area and keeps getting rejected, keeps getting pushed down. So it's like a ceiling. Price tries going higher, but fails. So that is why we call it resistance. And on a candle, the high, which is the highest point that candle has reached, which is usually a line above the box. This is what we call resistance. Same thing here. And to the downside here, this is support. It means price comes to this area and can't go below it. So it's like a floor. So a floor and a ceiling. So same thing on the candle. The low of the candle is the floor and the ceiling. And just like we've talked about here, price has 3 things. Price either breaks to the upside and continues with the trend. Same thing here. Price can either break to the upside, so we open here and go like that. we turn bullish. This is what we call a breakout to the upside. It means price has been able to break above that ceiling. And if we break to the upside, there is a high probability price will continue with that trend. So meaning the next few candles are likely to continue higher like that. That is scenario number one. Scenario number two is, if you look at again our option here, we either break to the downside and continue with the trend to the downside, which is also can be represented by a red candle going down like that. And it's telling us that price has broken below support. So if we've broken below support, then we are likely to continue going in that direction. And so what we've done here is that we've represented this whole price action thing with just few candles. And this is very important because this is exactly what we use. We don't need to know what all this is doing. We just need to look at two candles. This candle that gives you support and resistance, and then the second candle that tells you whether we are going up or down. And those are the only two candles you need. This one is the one that makes you money. So these two pattern, it's a pattern in fact. And so how do you use this pattern? So first things first, you need to know when to come to the market and use this pattern, because there are specific times of the day where price moves very explosively. So if we are breaking out of a consolidating range, we know that we have a high probability of picking that trend. And these times are for Asia. This time is 9 p.m. to 11 p.m. New York time. So use New York time. Go do your homework and search what is New York time to your local time. Use that time. Come to the market at that time. Then we have London. London session begins at 3 a.m. and ends at 5 a.m. New York time. And this is just our timing window. And then we have New York session, which is the best for me. And this begins at 9:30 a.m. and ends at 11 a.m. This is New York time. So when you come to this time, you want to use the 3-minute time frame. So we are on TradingView, by the way, if you don't know, tradingview.com. This is where you can see the charts. And these are some of the settings. Number one is when you come to your far right. So let me just point out things because I know some of you are already lost. So here, notice that if you just follow this arrow, you can come and say plus here, search US 100, and then add it. So US 100, I use this one, capital.com. Click it. Now you have your pair to trade. Second thing is time frame. This is time frame here. Use the 3-minute time frame. If you don't have the 3-minute, use the 5-minute time frame. That is step number 2. Step number 3, you've come to the screen at the right time. You are using the 3-minute time frame or the 5-minute time frame. You are analyzing US 100. So how do you use market structure to catch big moves? So I want you to imagine that there is a line separating. Where are these lines? Here they are. Separating your timing window from the rest. So this is before market opens, and this is after market opens. And for me, the market begins at 9:30 a.m. New York time. So the last candle before the market opens sets the high and the low, which is also support and resistance. So we will draw a box like that, and we shall put our area of resistance and support. So we want the candle after 9:30 now, after the market opens, to break below the area of support if we are going down. And if it's going up and it's blue like that, then we want the candle to break above like that. And what this does is that it shows you, remember the support and resistance I showed you here. Markets do three things. We either go up, go down, or stay in a trading range. So if we are in a trading range, the candle will just stay inside like that. We don't care about that. But if we break to the upside, then now we are cooking, because this is where you buy. You put your stop loss below this candle, and then you are targeting a 1:2, a 1:3, depending on how much you want to make. I recommend a 1:3. Or if it's to the downside, then you know, all right, we've broken below area of support. I mean support, yes. So we are likely to continue in that direction. So this is your entry here. Stop loss is above that candle, and you are targeting a 1:2 or a 1:3. It's as simple as that. So we have simplified price action into just two candles. One candle that gives you your area of support and resistance, one candle that gives you confirmation. So let me show you one example of how this works. So if we look at Thursday was the best example. You come to the screen at 9:30. So what we do is we draw a vertical line separating 9:30, the market open. And notice when we started, before the market opens, this is our high and our low. It's a small bullish candle, a small blue candle. Next candle goes down. All right, we are not interested in that. We are interested in when we have two red candles going down. Then we have a new bullish candle here. Then the next one goes down. So we know, all right, we have area of support and resistance. And the next one breaks to the downside. So what do? This is your entry here. Stop loss is above that candle, and you are targeting a 1:3. That was an easy trade. So this is exactly how you simplify market structure into just two candles, and you trade 1 hour a day to make ridiculous money, and people think you are worshipping the devil. Anyway, if you got value from this video, subscribe. I will see you in the next video. Peace out.